Okay, right. So I'm recording now. Right. So who here is aware of Libra?
I've heard of it. It's Facebook's attempted crypto endeavor that I don't think took off. Am I right in saying that?
Yep, that's correct. And I think it wasn't their first attempt. They tried, to the best of my understanding, they tried it a couple of times before.
Oh, I see.
Yeah, it wasn't their first time, but every time they tried it, obstacles were put in their way. And, you know, it's something that I've always found very interesting in terms of the growth of crypto. Because when it started, you know, I think all of us can relate to this. When Bitcoin first started, you know, it was difficult to get our heads around it, and we thought it's some kind of gaming pretend money, and it just didn't make sense. And it was hard to put a finger on where the value would come from. So it's no surprise that, you know, most people, even now, you know, can't quite grasp its value. But having said that, what I've been thinking is that for anyone who's coming into crypto now, they actually have certain advantages. And what I mean by that is, sorry if I'm not looking at the camera, by the way, I've got 3 screens and I never know where to look. So I've got the camera there and I've got a couple of screens here. So anyway, right. Oh, can you still see the screen that I'm sharing, by the way? Am I still sharing it?
Yeah.
Not yet.
Okay.
Oh yeah, I've seen it now. So.
You can see this screen that's being shared. Okay, 1 second. That's still being shared?
Yeah.
Okay. So yeah, so one advantage that people have now is that I think you would really struggle at this point to say that Bitcoin in itself is a scam. So obviously there's scams around it where you get people taking advantage of people's lack of knowledge, but I'd like to think that most people now at least accept that Bitcoin is here to stay. But even then, even if you accept that Bitcoin is here to stay, you know, what's its place? You know, what's it for? You know, some people might be asking. And what I always think about is the journey that I had. My crypto journey started in 2017. And some of you may know that, you know, it wasn't a smooth journey, much like some people are doing now. They go in all excited. They don't really understand what Bitcoin is about. And, you know, they might invest more than they should have, or they panic when the price goes down, etc. But after I invested, I did it back to front. That's when I started doing the research. So to my mind, the things that we're seeing now with Facebook, with Meta, that's confirmation that, you know, crypto is here to stay. So, you know, the fact that Facebook tried to launch Libra, now it's rebranded itself as Meta, it shows that, you know, it's really beginning to embed itself. And, you know, the concept of crypto being a scam is not in itself. But before I go any deeper, does anyone have any questions about why Facebook is now called Meta and what the significance is?
I'm not sure even Mark Zuckerberg knows.
Okay, well, it's well, I'll give a bit of an overview. Meta is the reason they've called it Meta, and so for those that do know, the reason that they've called it Meta is because they're referring to what's being called the metaverse. And the metaverse is what you might call a more interactive virtualization of the internet. So some of you may have seen a film called Ready Player One, which may seem a bit far-fetched. And for those of you that won't be aware of it, in Ready Player One, what people would do, they would wear a VR headset And once they wear the VR headset, they would be in a kind of like a virtual world where they would, play games or do whatever it is that they're doing. So if you were to look at the Facebook trailer, when they launched Meta, it's not just about playing games. It's you can think even on a corporate level. Imagine we're in an environment where we're wearing a VR headset for Zoom meetings like this. So we would put on a VR headset, and instead of you looking at me on the camera or us flicking back and forth on a one-dimensional, what's the screen, 1 or 2 dimensional? Anyway, on a flat screen, it would be a three-dimensional environment. So all of us in here would be having a conversation, and we would be moving our heads around, talking to a avatar representation of each other. So that's one aspect of it. And within that environment, there's going to be a means of exchanging value, and that's where cryptocurrency comes in. And the beauty of cryptocurrency and the blockchain is that, if we're going back to Bitcoin, it's once the currency has been created, there's no way of duplicating it. So as some of you may already be aware, there's a limit of 21 million Bitcoins. What I tend to say is there'd be no meta without the metaverse, there'd be no metaverse without the blockchain, and there'd be no blockchain without Bitcoin. And Facebook is trying to position itself because it's realized that there are other players in the arena, and if they're not careful, they're going to miss the boat. Right, so that's a bit of an explanation of what Meta is. Right, so yes, anyone got any questions about that? Okay, so I'll go on. Right, so is there anyone here who just needs a basic explanation of how to navigate the world of crypto, how to buy it, for example? Okay, I'll go ahead because I know at least one of you I think one of you is in that position. So what I wanted to talk about is a good way to get on board is to start off with an organization called Coinbase. Now, it does have a little bit of bad press because, once people are experienced, they tend to move on in different directions. But in terms of an onboarding process into crypto, I highly recommend that you start off with either Coinbase or another organization called crypto.com. And what I'll do is I'll actually send a few links that relate to topics that relate to interesting little projects that I may touch on in this little chat. So I'm gonna just copy it into the chat, and then you can refer to it in your own time. So I'm just gonna put that in here. And by the way, I don't know everything. So when someone's asked me what do I think about FTX? What is FTX? Sorry, Otto. Is that a coin? Oh, it's an exchange. Okay, that's not an exchange that I use myself. The ones that I wouldn't be able to give you any comment. The ones that I use, and some of them are in the links in the chat that I've added. I use Coinbase, I use Binance, I use Kraken, I use Bittrex, I use Coinbase.com, I use KuCoin. What else do I use? Yeah, I think that covers most of them. And you might be wondering, why do I use so many exchanges? And my answer to that is diversification in order to minimize risk. And the reason I say that is that exchanges can get hacked. So in answer to your question about FTX, I haven't heard of them, But from my point of view, the way that I'd look at it, if it's, and my apologies if it is a well-known exchange, to my mind, the smaller the exchange, the higher the risk. And I'd say it for a couple of reasons. One, it makes them more vulnerable to hackers. So for example, Binance has been hacked in the past, but because their pockets are so deep, they actually reimbursed the customers who lost their crypto. Now, if a smaller exchange is hacked, depending on the situation, it could be a case of where, because their pockets aren't deep enough to absorb the loss, that's the end of your crypto. And just to explain a little bit, exchanges, although they're the starting point for where you buy your crypto, because they have custody of your crypto, you don't have ultimate control, which means it keeps you vulnerable. So basically, it's a bit like if a bank is robbed. If a bank is robbed and the money is taken, if you don't have insurance, then that's it. That maybe it's not a very good example, but you understand what I mean. They're holding it. So if it's taken from the bank, if it's taken from an exchange, then you've lost your crypto, unless it's a very large exchange. And depending on the size of the hack, they're able to absorb the loss. So yeah, so I'm sorry, it's a bit of a vague answer, but yeah, I haven't personally heard of FTX exchange. Is it a crypto exchange, or is it a brokerage? It's a crypto exchange. Yes, sorry, I haven't heard of that one. But yeah, but as I said, and yeah, one thing to bear in mind is I say to people, depending on the size of your investment, what I would generally say is, once your investment gets beyond, let's say, £500, I would say you need to start thinking about taking your crypto off the exchange anyway. As I mentioned about, you don't have full control unless you're the one who has your crypto in a wallet that you control, whether that be a software wallet, which can be an application that's on your desktop or your mobile, or a hardware wallet, which looks a little bit like a USB flash drive. So that's one thing to bear in mind. Also, another thing to bear in mind is that although you may physically have a flash drive, what confuses some people, they think that some people think the cryptocurrency exists on the flash drive. That's not the case. All it is just a key that gives you access to your crypto, which is out there in the blockchain. So touching slightly in terms of strategy, because the way that I look at it is the majority of my crypto is in cold storage, and I have a relatively small proportion that I keep on exchanges, and that's what I would use for day-to-day trading or weekly trading, or however frequently I may be trading. And that kind of goes on to another point, because it's one of those things, most of us think when we go into crypto, that we're the exception and we're just going to walk into it and all of a sudden we're a skilled trader and we're going to make loads of money. But the hard truth is that most people, the majority of people, and a massive majority of people, if you go straight into trading in whatever kind of investment, you're very likely to lose your money. So, and statistically speaking, the people that hold on to their wealth are the people who invest as opposed to who trade. Having said that, if you're skilled, you will make more money from trading than you will from investing, if you see what I mean. But because of the volatility and, when someone is new, because of the lack of skill, you're not able to maximize fully on the trades. So in the long run, the people who make the most money are the people who just buy and hold their crypto investment. So even though there appears to be so much volatility in it, over the long run, year in, year out, Bitcoin, for example, is always going up in value. So that's one thing to bear in mind. So me personally, most of my crypto between, it's probably about 70+% is in cold storage. And I only have a small proportion that I use to trade various altcoins. That's part of the strategy that I use anyway. Yeah, so anyone have any questions at this point?
There's a couple in the chat, Albert.
Okay, yeah, public and private keys, sorry, yeah. Okay, so, right, so a public key is basically, you can think of your public key as like an email address. So your public key is what you use to transfer crypto from one location to another. So if you're buying crypto, so if you're okay, when would the public key be used? Okay, so let's say you're transferring your crypto from an exchange to a software wallet or a hardware wallet, what you would be using is the public key. So you will see on there will always be a withdrawal and a deposit option, and when you click on it, it will show what the software key is, and that's what you use to basically, you can say, a bit like email, is communicating to transact value back and forth. So that's the public key. Now the private key is the security, what you might call the proof of ownership. I'm going to try and look at the chat more often so I don't miss the questions. So the private key is what you might call the proof of ownership. If someone was to ever get their hands on your private key, then basically they can take your crypto. And what you will find is that if you have a hardware wallet or a software wallet, when you create it, when you transfer your crypto into that wallet, there will be an option to view your private key, which would normally be in the form of, like say, it could be like random letters and numbers. That's your private key, and that's something that you should never share. Never save it on the internet. You don't save it in your OneDrive or the cloud or anything like that. It should also always be, some kind of physical documentation of your private key. So that's the difference between the two. Your public key you can share with anyone, and your private key you keep to yourself. What about long-term investments? Yeah, I think I've answered that question already. Yeah, in the long term, yeah, for most of us, unless you're, because it's one of those, unless you study trading properly, because it is very hit and miss. There's a learning curve, but it's one of those things that it's simple, but it's not easy. Trading looks easy because it's so simple, but it's something that takes months and months before you start to get confident, good at it. If we have mentors within the IM Academy that we're in, and they're skilled, they're like 6, 7, 8-figure earners, and whenever you listen to their story, they always say the same thing. It took them 12 months, 24 months to get good at trading, which is another reason why I say it makes much more sense to focus on your long-term, to put the bulk of your funds into a long-term investment, and then while you're learning to trade, use a relatively small amount in proportion to what your investment is, and that's what you can use to trade. Obviously, we all get lucky every now and then, with Dogecoin and what's the other one, Shiba and all this kind of stuff, but they're volatile. So, I would never recommend anyone put the vast majority of their crypto investment into something like that. And one interesting thing that is this is my own personal strategy. I made a decision quite a while ago that when I buy and sell Bitcoin, I don't always look at the dollar to Bitcoin value or the pound to Bitcoin value. Let me get it right again. Yeah, that's sorry. If I'm trading altcoin, sorry, my mistake. If I'm trading an altcoin, I don't look at their value against the dollar. I look at their value against Bitcoin. And the interesting thing about that is that you would look at an altcoin and think, oh, look at that, that's gone up in price. But when you look at the trend over the years, quite often you find that although that altcoin has gone up in value, relative to Bitcoin, is actually gone down in value. So that's another reason why I don't just look at the value of an altcoin in terms of, oh, let's just say it was worth £5 and it's gone up to £20. But then when you look at if you had spent that £5 on Bitcoin and held on to it over that same period of time, you'd actually find that the Bitcoin has gone up in value more than the altcoin. So it's not straightforward in terms of thinking, oh, I'm going to buy an altcoin, then it goes up in value. You may find that you would have actually been better off just buying Bitcoin, holding it, doing nothing with it, and then it would actually have gone up in value more than the dollar or the pound value that it went up. So yeah, I'm all for long-term investments when it comes to crypto. And speaking in with that mindset, I always say dollar cost average. I preach by it, and in case you don't know what dollar cost averaging is, sorry, 1 second. Let's just say you have £500 to invest in crypto. And the common thing that most people do, including myself when I first started. So let's just say my budget was 500. When I got into crypto first, I put in like a massive portion of that 500, and then I saw the price going up and I bought some more, and I saw the price going up and I bought some more. Let's just say there was about 3 purchases, and then it was done. And then I had nothing left. Whereas dollar cost averaging is spreading out methodically how you invest into crypto. So what happened to me is in 2017, when the price of Bitcoin was going up, I was buying as it was going up, which is a classic amateur mistake. That's exactly the wrong thing to do. Because as you become more experienced, what you do, you buy the dips. So you have to think counterintuitively. So when everyone is panicking and said, oh, crypto is a scam, that's the best time to buy. So the way that I got myself out of trouble, because I bought so high as Bitcoin was going up in price, I dollar cost averaged. And what that means is that you can either do it in terms of a fixed time per week, per month, etc., or you can buy when the price goes down, or you can do a combination of the two. And what that does is that over time, because you're buying as the price goes up and down, let's just say you bought Bitcoin at, well, I'll go by today's prices. Let's just say you bought Bitcoin at $60,000, and then it goes down because it always goes down. And then you bought some more at $30,000. Because you bought it lower, your break-even price is going to be in between the two. Whereas if you had spent your whole budget for your investment at $60,000, you're going to be stressed until it goes up. But Bitcoin has a mind of its own. So Bitcoin, so if you bought it at 60, you have to wait for the dip to finish, which may last months, weeks, months, or even years. And you have to wait for it to go up. And go up it will, that's, I just know it will, but if you had bought at the higher price, your hands are tied, you've got no money left, and you're just stressed out waiting all that period of time before A, you break even, and B, you're going to profit. Whereas if you've been dollar cost averaging over the months, because your average price is lower, your break even point is so much quicker, and then you're in profits at a much earlier stage. And that's basically how I recovered from 2017. Yeah, FOMO. Yeah. Right. Anyone got any other questions or? Okay, so I'll go on. And by the way, I also use the same principle for when things are how they are now. You know how now the prices are good. Now, I say if the prices are going up and you don't have crypto, don't buy any unless you start with the dollar cost average mindset right from the beginning. And also, if you're already invested in crypto, when the price goes up, you need to take some profits. And if you listen to the stories that people told in 2017, there's so many people that were making money, but because they were thinking, oh, it's going to keep going up forever, they didn't sell and to take profits. And then by the time, then the price dips and it was too late, and they basically sold at a loss. And, and that made so many people disillusioned about Bitcoin. So so dollar cost averaging doesn't just apply to buying, it also applies to selling. So in terms of strategy, one of the strategies that I use is because it's a bull market at the moment, different cryptocurrencies, they're in profit at different days, etc. So what I do is I take a bit of profit from the different cryptos, but the thing is, I don't put it into the bank. So I either reinvest it into, so let's just say I make profit from a particular altcoin. I will reinvest that into either Bitcoin or Ethereum, because those are the two, what I'd call the blue chip cryptocurrencies. It's whatever happens, even if there's dips in Bitcoins and Ethereum, they're going to go up. So if you're thinking long-term investment, low risk, low stress, Bitcoin and Ethereum are the two to go for. But in terms of making more money, you definitely have the potential to make more money with the altcoins in the short term. And I stress in the short term. Obviously, there's tiers within it. You've got the blue chip, as I just mentioned. You have the what's called mid-cap coins, and then you have like the low-cap coins. They're the ones that they're worth a fraction of a penny. So yes, there is money to be made in the volatility of those other coins, but depending on the strength of that project, I would always say, basically take your money and run, and then reinvest it into Ethereum or Bitcoin. Another strategy that I also use is, I think some of you are in it already. I actually put some of my profits into Hyperfund. So Hyperfund is something that pays you 0.5% of interest on a daily basis. So what I do is, I invest some of that in that, because whatever you put in, it triples. Now that's a risk. What if, because, if you're new to Hyperfund, you look at that and think, well, isn't that a bit of a scam? So yes, it could be. Evidence suggests that it isn't. The people that run it at the top, they've been in crypto for 7+ years. They have shares in Binance, etc. So, they have contacts with politicians and all that kind of stuff. So if it is a scam, it's a bit of a weird one because they're highly exposed. So that's one of my strategies. So rather than put profits into the bank, I would rather put it into another altcoin or Hyperfund. And just to explain, because those of you that don't know much about crypto, Hyperfund is in the ecosystem of something called DeFi, which is decentralized finance. And what that is within crypto, different cryptocurrencies can be used to, this may sound strange if you're not already in it, but if you own a cryptocurrency, you can be, the term is used, you can be your own bank, and that's literally the case. So if you have a particular cryptocurrency, you can do something, you can have it held by a particular organization, and because you're keeping it with them, giving them liquidity, it's a bit like if you think of your bank, people would do ISAs before. So as a thank you for having an ISA, i.e. not touching your money, the bank would pay you high interest. And the same applies to cryptocurrencies as well. There's certain types of cryptocurrencies where if you hold it in a certain location, you get paid interest. Now, so depending on the project, you get a low interest or a high interest. So the hyper fund that I'm doing is just one of several ways of earning interest that I do within crypto. So yeah, there's so many, there's so many amazing things going on within the world of crypto. So from my point of view, the idea of putting money in the bank is like, does not compute. Why would I put money in a bank? Because you put money in a bank and it's just going to depreciate in value. So I'd rather any profits that I make, I make sure that money works for me. And when I'm ready to spend it, that's how I see hyperfunding. It's part of DeFi, and and it kind of, so yes, what I said, I'm not going to BS anyone. Maybe it's a really long-term scam. It's been around for a couple of years. It's not going anywhere. But it's that saying: don't risk what you can't afford to lose. Whatever you go into, don't go crazy. So in terms of hyperfund, I heard about it last year. I paid no attention because it seemed very similar to scams that have gone on in the past. But I thought to myself, okay, I'll put in money that some of the profit that I've made in other cryptos. So I went in with a small amount at the beginning of the year. And when I checked it around summertime, it was 10 times the value. So I thought, okay, let me take it a bit more seriously then. So that's what I would say to anyone. So whether you're doing what I would call a higher risk like hyperfund, or whether you're doing Bitcoin or Ethereum, everything's a risk. But in terms of your emotional attachments to that risk, that depends on whether the money you put in is money you depend on, i.e. don't risk what you can't afford to lose. So it's a bit like in 2017. The reason why I was able to hold on, by the way, would you believe it actually took me 18 months to break even. That's how long I had to wait in 2017, 18 months to break even, by being patient and dollar cost average little chunks every now and then, because, I'm embarrassed to say it, but I bought, as it was rising up to almost $20,000 at the time. But then afterwards, when it dropped, I was buying all the way down to $3,500. I got a fair bit when it was down to like 6,000-7,000 and all that, and then it gradually, my break-even point got lower and lower and lower, and then I was okay. So yeah, so relating that to something like hyperfund, you go in with something that you can afford to lose. You don't stress about it. That's how I see it anyway. Okay, anyone else got any questions about anything? Yeah, it's not even dual investment. It's like, because here's how I look at it. It's like, okay, I'm talking about hyperfund a lot today, right? So so like I said, I will put profits into hyperfund, and my theory, because hyperfund has like a slow maturity. For those who don't know, it matures very slowly. So the way that I'm looking at it, as I said before, we're in a bull market at the moment with crypto as a whole. Now so a bull market is an upward moving market. Sorry, if anyone is not a trader. So we're in an upward moving market at the moment, but eventually it's going to go down again. And judging, historically, when it goes down hard. So my mindset is that if I'm investing profits into hyperfund is maturing slowly. The way that it works, you're able to get, I'll explain market cap in a second. Yeah. So the way that it works is although it matures slowly, it releases chunks on a gradual basis, depending on how much you've got into it. So what my mindset is that when the crypto market as a whole goes down again, I will be using money from Hyperfund to buy some of these altcoins when they've crashed. That's the way I'm looking at it. So, obviously being part of IM Academy, we have these educators that give us good tips in terms of which are the altcoins that have longevity. They're the ones I keep an eye out for. So like I said, I would then, as I'm cashing out bits of Hyperfunds, that would be one of the sources that I would use to fund any altcoins, Bitcoin or whatever that I'm buying in the future. So it's kind of like it goes back and forth. Each one can help the other. You see what I mean? So that's part of my strategy. So market cap is let me just read that again. Where do I see the total global market cap? Can I explain what market cap is? Right. I think that the overall okay, what's the exact term? Market is, I don't know if cap means capitalization, but basically, broadly speaking, what market cap is you have a cryptocurrency, and the market cap is the overall value of that cryptocurrency. So what you would tend to find is that, and this is where you've got people that have like a high risk tolerance, they're happy with high risk investments or strategies within crypto. What they look for, they will look for an altcoin that has a low market cap, i.e. the value of all the coins in circulation or likely to be in circulation is relatively low. So what I mean by that is, if you get an altcoin, because you go to sites like CoinGecko, and you can see the total value of all of the coins of that particular cryptocurrency, and it may be under 1 million or just a couple of million or something like that. And they're the ones with the biggest potential of growing, multiplying by hundreds and thousands of %. But by the same token, they're the ones that have the biggest risk of crashing literally to zero. So market cap is how big is the value of that particular cryptocurrency. So the bigger it is, the more mature it is. So broadly speaking, if it's a low market cap, the potential for profit is higher. If it's a large market cap, the potential for profit is lower in terms of proportion. So for example, Bitcoin has a massive market cap. I don't want to misquote. I think Bitcoin by itself is 1.5 or 2 million now. I can't. Billion. You can make a lot of money from Bitcoin, but the percentage moves from Bitcoin are tiny compared to the altcoins at any given time. If you see what I mean, when Bitcoin shoots up, an altcoin will shoot up by a much larger percent over that same period of time, if you see what I mean. So yeah, market cap is the total value of that particular cryptocurrency. I hope that's a good explanation. Anyone else got any questions? Okay, right. So I'm always conscious not to keep people too long in the evening. So I will bring it to an end unless someone has a particular question. And you don't have to use the microphone if you don't want to. You can ask it in the chat as well. Can you explain volume? Okay, so volume is basically the amount of trading of any particular coin. So yeah, so it's basically the amount of trading that's taking place for a particular coin at any one time, and that gives you an indication of the interest in that coin. So you may have a coin, and then there's not much activity going on in all the exchanges. So it's like not much going on here, and you could in some way say it's safer because if there isn't much volume, there's less volatility. But if there's volume, then there's more potential for profit to be made. I hope that's a reasonably good amateur explanation. And that's correct, yeah. And that's one of the reasons why they say Ethereum is doing so well now, because now Ethereum has been upgraded and there is burning of the coin now. So that's one of the things that's going to give it greater value over time. Yeah, and oh yeah, just one thing I wanted to say about Bitcoin is this: it's one thing to bear in mind, and another reason why, you know, I won't say, you know, I'm very confident that the price is going to shoot up, is remember there's only ever going to be 21 million Bitcoin, and as I speak, I don't have the exact figure, but around 18 million Bitcoin have already been mined. 18 million are already in the hands of people, and it's like, one of the reasons why I'm so passionate about it is that, you know, Bitcoin wasn't taken seriously for years. And the people that got their hands on it weren't powerful institutions. The people that got their hands on Bitcoin were ordinary people. They're not ordinary people now they're powerful. But the institutions who want to get their hands on it, relatively speaking, they're never going to have the bulk of Bitcoin unless they scare us into selling it. And that's why I you know, I'm always like, it's so important for people to be educated about Bitcoin and cryptocurrency, because if you know and understand crypto, when you hear things in the news, when you hear like Elon Musk talking about Bitcoin not being environmentally friendly, you know, you panic and you sell your Bitcoin. That's what powerful people want, because there isn't enough to go around. So bear that in mind. So, and the other thing as well is that because of the nature of large institutions, they can't just go out and buy Bitcoin the way we can. You know, obviously we don't have the financial resources. So it's like, we can buy it just like that, but we don't have the financial resources. They can buy it just like that in terms of resources, but they can't buy it because they have to do due diligence. They have to keep their shareholders happy. They have to be much more vigilant in terms of security, i.e., you know, how do they, you know, because they're dealing with such vast amounts, how do they keep their Bitcoin safe? You know, so their security procedures aren't the same as ours. You know, we would have like a fancy flash drive. They would have their crypto in a vault under a mountain, that kind of thing. So because they are responsible for other people's money, depending on what type of institution, they can't just dive in. So in the meantime, what do? They create doubts, they create uncertainty, trying to shake the tree and get us to get rid of our Bitcoin. They want us to think short term, but you know, bear that in mind. Hold on to your crypto when you get it, because it's only going up in the long term. That's the last thing that I wanted to say, unless someone has any questions, that is.
I have a question.
Yeah.
So when the bull run ends,
yeah,
does it like just plummet to the ground, or does it take days or weeks? I'm not sure how long it like takes to change price, if you could say it that way.
Well, bear in mind, I'm definitely not an expert trader. You know, I'm being taught. You know, so I'm more of and that's partly why I invest. So it's unpredictable. So, but what you tend to find is that the really sharp moves down, or the really sharp moves down, it tends to bounce up. So if it's like a really steep dive, quite often it would just bounce right up again. But you can also get a gradual one. So I couldn't say, okay, so for example, historically, like say in 2017, Bitcoin shot up, you know, really fast over a period of, I think it was about 6 to 8 months. But then the winter, it literally lasted, you know, 1.5 years, something along those lines. It was a long time, you know, before it started to stabilize. And if you think about it, in terms of coming back to the peak of the 2017 price, it didn't match that price again until, what was it, winter of last year. That was 3 years. So anyone who would have bought Bitcoin at the top in 2017, if they hadn't dollar cost averaged in the meantime, it would literally have taken them 3 years to break even. And that's why, you know, that thing about shaking the tree. So anyone who didn't have the knowledge to hold on, they would have sold their Bitcoin, and you can guarantee they would have regretted it in the winter of 2020 when it, what did it do? It went up to 20,000, and look where it is now. So in terms of, so how long the downtrend lasts, in a sense, depends on what price you bought it at as well. So it's not a pure question, if you see what I mean, because there's movement up and down. It kind of depends on when you bought it. So if you bought it when there was a really sharp dip, and then it goes up not to where it was before, and then it's moving around, you're in profit anyway, so you're not really that fussed. But to someone who bought it at the high price, if they haven't dollar cost averaged, as far as they're concerned, it's still in a dip. You see what I mean? So I don't, and that's another reason why it's good to think in terms of investment for the majority of your holding. And then in terms of the trading, you can actually make money go with the price going up, down, as well as it going up. You don't just make money when Bitcoin goes up in price, you make money when Bitcoin goes down in price. That's where the trading comes in. So yeah, just in case some of you weren't aware of that. So there's money to be made all the time, not just when the price is going up, but you just have to know the mechanism for doing that. And i.e., that's why I'm in IM Academy. I hope that answers your question. Is there a way of temporarily selling it and then buying it back? Okay, so yes, I'm glad you mentioned Coinbase again. Crypto 101. If you buy on Coinbase for your first purchase, which I tend to say, you know, your first purchase might be under £100, buy it from Coinbase or crypto.com, that's fine. But as soon as you've made your first purchase, make sure you go to another exchange or Coinbase.pro. And Coinbase.pro, if you've got a Coinbase account, you also have a Coinbase Pro account, but it's not, well, it's not publicized. So your login credentials that you use for Coinbase, they're the same login credentials that you use for Coinbase Pro. And with Coinbase Pro, you've got more control. So yes, you would buy and sell on Coinbase Pro. So let me see. If you give me a second, I will.
Yeah, I didn't even know that, Albert. Really basic, but
yeah, that's the thing. They don't publicize it. So yeah, no. It's I'm not sure. I'm just going to stop sharing for a second because I don't want my account to pop up and you see what I've got in there. So 1 second.
Because what you were saying about obviously making money when the price goes up,
yeah,
that's when you sell, isn't it? Or I got that the wrong way around.
Yeah, so basically, okay, because what you have and is you make money when the price goes up in the general sense, but there's something called leverage trading, which is kind of like it's a bit more similar to what happens in the foreign exchange market. So leverage trading is that's higher risk. So what leverage trading is let's just say you have Bitcoin worth, you know, the amount of Bitcoin you've got has now come to the value of £1,000, and you're trading half of that. By the way, that's bad practice, but I'm just giving you an example. You know, so let's just say you're trading with half of the value of your Bitcoin, which is worth £500. When you do leveraged trading, okay, it's a bit hard to, okay, right. Let's just say you're trading with £500 and it goes up by 10%. You're going to make, what's that, £50, aren't you? Whereas if you do leveraged trading, what you're doing is your broker, because you're doing it with a broker, your broker will loan you money so that your 500 will behave as if it's 1,000, 2,000, or whatever it may be. So you could do a trade that's, you're using 500, but the broker is making you trade as if you have 5,000. So if that trade goes in your favor, instead of making £50, you make £100. But then at the same time, if you lose that trade, you lose your money as well. You see what I mean? So that's what leverage trading is. So when you're doing leveraged trading, you're not restricted to just selling. You can also make profit on the price going down as well, because you're guesstimating that you think that the price is going to go down as opposed to up, and then you make money on that.
It's a bit like disaster capitalism.
Yeah. So actually, let me show you something. So let me give an example, because where is that thing gone?
Is this the kind of the main way that you're really kind of making money then, really? Because if you just buy and then leave it to sit there, which is kind of what I've done so far, obviously it's not really, there's not a huge amount, although I've done well with my experiment, there's not much going on. Whereas I'm guessing if you get into all of this, then, that's how you can make a lot more money off it.
Yeah, it's like, as they say in our academy, multiple streams of income. There's so many ways of there's loads of ways. So yeah, I mean, you have to kind of say what's your risk tolerance. So if you're a high risk trader, then you would do leverage trading. So this is something that we have within our academy. So because for those who don't know, we have like a foreign exchange section, we have a crypto section, and they're actually going to bring in a stock section as well. So okay, so we actually get suggestions for those people who do leverage trading. So if you're doing leverage trading, they use this as a guide. Now, this is a good example. So we've got experienced traders that give us pointers on when to buy and when to sell. So you see here, they've given us an indication to buy, and that was a great time to buy. But this is day trading. So if you did this, this is a perfect example of not being greedy. So you've got an indication. You can see my mouse moving, can't you? Can you all see?
Yes, we can. Yes.
Yeah. Sorry. Yeah.
So you're given an indicator to buy. So you buy, and then if you're sensible, say, okay, I've got my target of how much money I want to make. So a good example is, one thing we're taught in trading is that something called support and resistance. So if you're following those kind of rules, you look historically, if you can see that dotted line, historically, what am I looking at? Ethereum. Ethereum has been at this price where you see the line. It's hit that price a couple of times in the past. So if you're being sensible, you would say, okay, when it hits that price that it's hit in the past, I'm using my fingers if you can see my finger. So when it hits that price it's hit in the past, that's a good time to take profit. But if you're greedy, you might hold on for too long. And then what happened after that? The price plummeted. But then someone else would say, do you know what? It's hit that price in the past. That's when I want to go into sell. So the person who would have had that mindset, if you look at the distance that the price has traveled, the person who went for a buy with the green candles wouldn't have made as much as the person who went for the sell, which is the red candles. And that's a very crude explanation of leverage trading. So yeah, but there's, like I said, it's down to, like I said, I'm still learning to trade. So I don't really touch the leverage trading, but I still use it as a guide for when I'm buying crypto. So because if I'm thinking to myself, oh, I want to buy a bit of Bitcoin or Ethereum, I these days I will refer to this and see what the gurus are saying. And so even though I may not be doing leverage trading, I say, okay, they, because they give notes, because, we have like video tutorials on a daily basis of what's going on in the market. So they would give an idea of what's going on and say, okay, if Bitcoin goes down to this price, I'm going to buy a bit more. You see what I mean? or they might say they think lots of it are going to be sold at a particular price. So if I want to take profit, I might sell it then, with a bit more knowledge of a good point to sell. They also do. So this is what I mean by tips. They give various tips on which coins to buy at which prices. So they give us a lot of guidance, on what we can be doing.
Just a really quick one on this, sorry, but is there any kind of automated service where you can just say, right, I'll invest X amount, and I don't know, kind of AI follows the pattern and kind of makes the decisions for you and just does all this kind of, you accept the risk.
Well, actually, that's what. Sorry, I'm giving a bad explanation. See, I'm giving a crap. It's actually an AI that does this. So
okay, right.
Yeah, so this is an AI, and this one is human suggestions. Sorry, my bad.
Right,
gotcha. Yeah, so this is human suggestions, and this is an AI giving suggestions.
But if you wanted to say, just follow this pattern and do your best with my money, kind of thing, is there any kind of service that just kind of automatically takes these decisions to?
And we actually have loads of them within the academy. So who was that saying something?
Yeah, it's Denise. I was just going to say, that's probably where you do a buy limit and a sell limit and all that, isn't it? When you,
yes,
if you've got on the exchange, if you've got your funds in there, you can set up a buy limit or a sell limit or whatever else there is. I think there's a few, isn't there?
Yeah.
And then it will just activate when it comes to that price. So I think that's what you're trying to ask, isn't it, Ben?
Yeah. Sorry, I'm very new to all of this, but yeah, thank you. That's really helpful.
Actually, what I do, if I can just, if I stop sharing, I'm going to bring up. I'm just going to log into my Coinbase Pro and show you something which goes into the what was just mentioned about. So bear with me 1 second. I just log into my Coinbase Pro. Where has it gone?
You don't want to show us how rich you are.
Or how little I've made in all this time. Where has it gone? I don't know. Bear with me. Okay, just logging in. Okay, let me see. Right, okay, I'm gonna. Ben, I'm such a nerd. I've got 3 screens, I've got like one big one over here and then 2 small ones, one on top of the other over here.
Just like the real trading floor.
Right, okay, so I'm going to share my screen again. Where's the thingy gone? Bear with me. Okay, right. So I think probably all of you or most of you already have a Coinbase account. You see, this looks completely different. So this is like a proper exchange platform that you use to trade cryptocurrencies. So
are you sharing your screen, because we can't see it yet?
Oh, can't you? Oh,
No.
sorry. Okay. Oh, sorry. Yeah. What about now?
Yeah, we can see it now.
Yeah. Okay. So this is a typical exchange account that you would see on Binance, Coinbase, and all the others. And the difference between this and Coinbase is that you have so much more control over when you're buying Bitcoin. So the reason I always say, yes, do your first purchase on Coinbase, but your second and onwards, do it on Coinbase Pro or crypto.com, etc. And the reason being is when you buy on Coinbase, if you say you're spending £100 on Bitcoin, when you click the button, if the price has spiked, in the millisecond between you pressing it, you're going to pay the higher price. And it can go the other way around. If it goes spikes downwards, you're going to benefit, but you don't have any control over that. So what you do in the pro environment, so you've got 3 types of orders. This is, it took me a while to get my head around when I was trying to learn it, but so when you're on Coinbase, you're doing what's called a market order. You basically click, and whatever the value, that's what you're going to pay at the time. Then you have what's called a limit order, and you would say, let me just change it to Bitcoin. So let's just say you want to, okay, so let's just say Bitcoin is, you see Bitcoin is £48,500, and you want to buy it, but you want to buy it at £500 less. So you want to buy it at 48,000. So you would say, that's how much I'm prepared to pay for Bitcoin. And that's how much I will, you see at the bottom, it's showing you what you've got. So you're prepared to pay that price. That's how much it will cost you. So
are you able to zoom in a bit, because it's quite tiny?
Oh, is it? Oh, sorry.
Thank
Okay.
you.
How's that? Is that okay?
It's better than before. Thank you.
Okay. So so if you're buying, it's probably a bit too big now. Can I zoom it? Can I drag it? 1 second. Yeah. So let's just say I want to pay £48,000. I want to buy Bitcoin when it hits £48,000. So you put in, I've put in. If I click on max, it shows how much Bitcoin I would get at that price. And what would happen is that when you, so the total value in terms of pounds is £25.81, and the transaction will cost you 13 pence. Now, if you were to do that on Coinbase, I think they charge 1 point something %. Now, when you're dealing with small amounts, you don't feel it too much, 1% of 50 quid, etc. But when you start going up into hundreds, you feel that, and it builds up over time. And as I said, the other thing is that you've got no control over how much you pay. So that's why it's better to be on the pro account. Now, if you want to go one better, you can do what's called a stop limit. So with that, you can say to yourself, I still want to buy Bitcoin when it's at 48,000, but I don't want to execute the order until the price goes down to, let's just say 48,100. Okay, and that's how much it will be the same amount. So if you then, what you would do then is place the order. So if I was to place that order, so you see it's in a queue. So you haven't bought Bitcoin yet, you're waiting for it to hit that price. So you could be using a strategy where you're being guided by the bots, and because you're not going to be in front of your computer all day long. So you may say to yourself, okay, if Bitcoin does hit that price, I want to do an order, but I'm not committing to it unless it goes there, and then I'll buy it. And so each has its pros and cons. So this one means you're committed, but you can cancel it, by the way. So until it hits that price, you always have the option of canceling that order. You see what I mean? So you've got that flexibility. So yeah, so that's I hope that's a good explanation of
yeah, it's brilliant. Yeah, thank you. So you obviously, for different cryptos, you could set one up for Ethereum, and obviously have different rules.
Exactly. Exactly. Yeah, exactly. So yeah, so I mean, Coinbase, I mean, when I started Coinbase, all they had was Bitcoin, Ethereum, Litecoin. That's it. You know,
Hundreds now.
yeah, and it's still, and compared to other exchanges, they don't actually have that many coins. That's another thing that goes into how deep you go into the rabbit's hole, because a lot of the people that, if you're like a high risk trader, you go for the coins before they get to the big exchanges. Like, say someone mentioned FTX, that may be a smaller exchange. So what you tend to find is that the more obscure coins, there's actually that it's a three-legged journey. They start off in decentralized exchanges. I won't go into that today because there's too much to absorb. You start off with decentralized exchanges, which are, that's when they're virtually unknown unless you're really deep into crypto. And then a coin, as the success of a coin grows, it goes to to the smaller, lesser known exchanges. And then when it's popular, like say, I don't know, like I think, like for example, Sheep Coin, I hope I pronounced it right. By the time it gets to somewhere like Coinbase, the people who have really raked in the money, they've already made their money. So if you're going deep into crypto, into the low cap coins, you want to get in before it gets to Coinbase, not when it gets to Coinbase, Yeah, so that's a little bit of information for you there as well. Anyone?
Thank you.
No problem.
I have a question. Can
Okay.
I? So, for example, if I'm looking into an altcoin,
Yeah,
and I want to read articles and YouTube videos about it, how do I know which articles are actually real and not like sponsored by someone? Like, you know what I mean? Like, how do you know the information is actually real? Because
yeah, that's when they say shilling a coin. That's what they call it, shilling a coin. Well, that's why I joined the academy, because I spent a lot of, and I still do, but not so much. I spent a lot of time on YouTube following people and stuff like that. But yeah, you get that sometimes they're sponsored and all this kind of stuff, and you can never be 100% sure. So, however, within the academy, that's not a motivation for any of the educators, because we're already in the system, if you see what I mean. We pay our subscription and it's fixed. So just to give you an idea, there's always going to be what you call human failings, or whatever you want to call it. Now, what would the motivation be for these people? These are the people that some of the people that I'm guided by. We're already in the academy, and within the academy, we have like 200 people teaching, whether it's crypto, foreign exchange, etc. So the competition with them is they have to be good at what they're doing to be an official educator. I'm not even looking at the camera, am I? Yeah, they have to be really good at what they do to be an official educator. They have to have, I think the minimum is 6 months of consistent trading in whatever they're doing in order to be to be authorized to teach. That's one. And then within that, if they're not up to scratch, they lose their platform. And also there's the human competition, isn't it? They want to be if I can go back to that page, they want to be recognized within the academy as being one of the best teachers. So what you tend to get, you get a leaderboard. So if they appear, well, I'm not navigating properly. But
if you click on the lady's head, it takes you back to on the top. Scroll up.
Oh yeah. So for example, these out of the 200 plus educators, if your face isn't there, basically to get there, it means that you've proved that you're really good and you're consistent and you have a lot of people following you. So broadly speaking, an educator can have anything from a few hundred to a few thousand following them for their live sessions. So in terms of the help that we get, if I go back to the crypto one, which is called DCX, these people specialize in different things. So for example, this guy teaches you the this one here. And then you've got, for example, this guy here, he goes deep into what, remember I mentioned decentralized finance, you know, put in a crypto here to gain interest. So he goes deep into that. This one goes into, he does lots of deep research into which are the good altcoins to get into. And this guy here, well, Crypto Picasso, he's just pure Bitcoin, you know. So he's been a trader for 10+ years, most of that time into Bitcoin. This guy here, he's the XRP Ripple guru. So, and we've got a few other people as well. Where are they? They're on this page. Anyway, we also have some educators that specialize in NFTs, if that means anything to anyone here. So that non-fungible tokens. So all of that stuff where where crypto is leaking into gaming, which is up, which is why Facebook is going crazy now, because gaming is going to be a massive part of what's going to create mass adoption for cryptocurrency is gaming. This is one of the guys. Yeah, these ones. They're into NFTs, so they give you advice about which NFT projects to look at, and they give advice on that. So although I still look at YouTube, I see this as much more of a trusted source because they're not being sponsored. We're already within the ecosystem. So I'd actually say to anyone here who's not in the academy, or even if you're in the academy and don't have DCX yet, for a non-member, just join for a month. You know, you don't have to stay forever, but within that month, you will get access to a wealth of knowledge. And if you were to join, I would say have a look at this guy, because what he does, he goes to, okay, like I said, NFT, the basics of crypto, how to, where is it? Within his favorite videos, he has, oh God, anyway, he's got in here like Crypto 101, how to buy it, because I think Ben, you'd appreciate, it's, you know, it's not just about making money. How do you do things safely? So he recommends things in terms of, all to do with how to keep your crypto safe, how to make sure you don't get scammed, all that kind of stuff. So as a basic 101, I tend to say, because I get approached by people all the time, and sometimes they're about to do something. I say, oh my God, no, so the best thing, look, get yourself educated. So you could join for a month, because there isn't a subscription, you can cancel anytime. You could cram as much knowledge as possible, and then if you don't want to stay, you can go, because as far as I'm concerned, it's more important not to get scammed, because it's so easy to happen within the world of crypto. I'm trying to find his 101. Anyway, it's in here somewhere, but yeah, all kinds of things that you can go into, and all of them have multiple sessions during the week. And obviously at the moment it's really exciting because there's so much going on. You see here, there's like a timetable of the different things that they do. So yeah, so for me now, YouTube is a nice supplement, but in terms of core knowledge, going deep into things of how to do it, how to do various bits and pieces, this is where they teach us, because that's why it's called IM Academy. So I hope that answers your question.
And also, I think there's an offer going on now for.
Yes, yeah, it's discounted by $50 at the moment. But I don't want to make this into too much of a pitch. But yeah, if anyone wants to reach out to me and ask me any questions about joining, because there are proper presentations. Mine is just a very amateur introduction. But if you want to talk properly about that, please reach out to me. I think I put my Instagram in the chat when I started this conversation, and I can give you guys my email as well, just in case. So yeah, so if you want to, and it's the same with Instagram as well. Yeah, and I'm also on YouTube. And that's probably where this recording is going to go anyway. Yeah. Yeah. So, anyone else got any questions that they would like to ask?
Yeah, thank you very much. That was very useful.
No problem. Yeah.
Yeah,
But next
thank
time, next time I want other people to give me their ideas as well, because I'm always learning as well.
Yeah, I've got a few ideas about DeFi.
Okay.
Yeah, so
Maybe next time, because gosh, 1.5 hours now. But so if you guys are interested, I'll do another one in the next 1 or 2 weeks. Give me some feedback, and then we can do another chat as well. I'm happy to do that.
There's a wealth of information on DCX, and I didn't really realize that until quite lately. So
there's
very
it's and I hope what I said gave you a bit of a guide, because what I like is that they specialize in different things. So like I said, if you want to learn about NFTs, where's that young guy gone? If you want to learn Zachary and Jordan NFTs, research, Kurt
I've been following Curtis a lot. Also because my son is called Curtis. So.
Okay, that's so is my nephew. So they've all got this. I haven't even looked at some of the others yet. So.
I came across Sean by mistake as well, and I like him a lot as well. Anand, is it Anand or no Hirsch? Yes, Hirsch. He's very funny.
Oh, okay.
He's got a very unique way of teaching. Can be a bit sarcastic sometimes, but it's it's funny.
Okay, cool. So I think there's a couple more comments. Okay, so I think I'll bring it to a close now, if everyone's okay.
Thanks, Albert. Yes, thank you.
Okay, and like I said, if you want to know about IM Academy, just reach out to me with my details down. I can basically give you more information on a one-to-one basis, so a bit more concise.
By the way, Carlos says hi.
I was thinking, you Carlos's son.
Yes.
Oh, nice to meet you.
Nice to meet you too.
Are you in Spain?
Yeah, I'm in Spain right now.
Nice. Yeah. Oh, So what's your name? Sorry.
Otto.
Oh, it's Otto. Yeah.
Yeah.
So everyone here, this guy, you're 16, aren't you?
Yes, I am.
Yeah. What you're learning at the age of
Otto, you are setting yourself up for a very big future.
Yes.
Yeah.
Yes.
Well done.
Yeah. Well done indeed. Yeah.
Anyways, thank you for teaching us some of this information.
No problem. You're more than welcome. Okay, right. Have a good evening, everyone.
You too.
All right.
Bye.
Cheers, thank you.
Bye. Good night.
Bye. Take care.
Bye.